Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Edward Smith, Asset Allocation Strategist for Rathbones. Hi Edward.
Hello.
So today we're going to take a term that a lot of people have heard of, but you think they're not quite understanding properly, and that's alpha. So what is alpha?
So to put the theory very simply, we've got alpha and we've got beta. So beta is the element of investment return or portfolio returns that can be explained, and particularly can be explained by market risk, by exposure to a market. Alpha is the residual; it's the unexplained element. It's the dark matter. Now, it's sort of commonly thought of that alpha represents some sort of fund manager, stock picking, secret source that they should be able to achieve, because it's got nothing to do with the market, that they should be able to achieve in all market environments. Now, that's perhaps a bit of an oversimplification. I think investors need to ask, what if beta is about more than just exposure to a certain market? What if we broaden out that definition of beta to include various other risk factors? Those risk factors could be things like style biases, like growth, quality, value. It could be about leverage. Another factor might be the size of the companies invested in. Now, if we think of it like that and take it back to performance measurement, the alpha, when you have all of these different kinds of betas, may be a little smaller. But that doesn't necessarily mean that fund managers have less skill. By any means, it just means that investors need to think about which skills they're wanting to pay up for at a given moment in the cycle. Now, it takes a lot of skill for a fund manager to consistently maintain exposure to a certain type of beta, let's say a quality beta. It takes a lot of skill for a fund manager to allocate between different types of risk factors in different markets. Now, all of that it is worth paying up for, but it's not necessarily this alpha that can win out, that can always outperform in all market environments.
And that's an important point to make, because misunderstanding these definitions means, as you say, investors risk buying a particular fund and thinking, well, this fund manager has done particularly well for the last 2-3 years, which is quite different to the way that the underlying market has returned. Therefore, whatever the market does, this manager will outperform.
Yeah, that's absolutely right. So in the traditional, very simple version of beta and alpha, it may look like this guy's generated alpha for 3 or 4 years. He'd be able to do that all the time. That's great. That's what alpha is. But actually, what if he's just a great quality fund manager, for example, that has a quality bias, companies that have good balance sheets, can grow their earnings consistently. He's just great at picking those sorts of companies, and it's that type of beta, that risk factor, which he is getting you exposure to, that is winning out. Now, it might still be worth investing with him if that's going to continue, but it's those sort of questions that you need to think about.
Let's put that into practice then. We're at a particular point in the market cycle in the UK. We've had a very good run from the credit crisis, but the last couple of years have been quite sticky, flat, in particular for large caps. So bearing what you've just said in mind, what sort of style bias, which indeed is still beta, should people be going for at this point in the market cycle? Well,
I used the example of quality a moment ago, and I think that's something that we've seen consistently outperform for a number of years. And there's a lot of earnings uncertainty in the world today, and we think investors are going to continue to pay up for visible earnings, those companies with a track record of growing their earnings stability, some sort of reliability. So again, we think those sort of quality betas, those growth betas are going to win out.
Edward, thank you very much.
Pleasure.
This is Emma Wall from Morningstar. Thank you for watching.